amid growing concerns about economic growth.
Consumer spending was
As
soft.
expected, cut interest rates another quarter point.
We are following breaking news. All three major American stock markets have closed down.
Bitcoin rose 10%.
Even gave the stock market a temporary second win.
The market reaction, it was kind of nonplussed.
Tariffs going into effect tomorrow.
But the NASDAQ was also.
Investors will be watching closely for more clues about the direction.
It's time to tune out the noise and tune in to great information with A Steward's View. Expect valuable economic updates, investing techniques, and planning concepts that move you to be wise and decide well. You'll be equipped and encouraged in a stewardship mindset, managing God's resources 1 week at a time. You can listen to this podcast and previous episodes at astewardsview.com.
Welcome back. I'm Aaron Kolkman. That's Chaz Louder. Here is Paul Larson, and this is A Steward's View. So glad you joined us again. Check out the weekly economic and market roundup on this week's blog post at astewardsview.com. That's /blog, astewardsview.com/blog. You'll find all of the recap that we have done in the past on this program out loud, and a little bit of economics and a little bit of market updating there going on, and a preview of the week ahead. So do visit that at your leisure. You'll see that posted by tonight when this episode goes live. But this week on ASV, we want to help you cut through the information chaos of the digital era, just like we have been since March, just like we're going to do in the future, Lord willing, so you can be wise and decide well. That's the goal. Yes, our wisdom bank is on tap for you. We have Paul here, we have Chaz here, and yours truly. But I want to talk about, since kind of where we've been recently. In August, we started talking about planning topics in the series called Beyond Returns. We talked about optimizing assets. We've talked about planning with a picture or a puzzle box. And we've talked about dealing with the number one financial risk that a family has, and that's a failed estate plan. Just last week, we leaned into legacy. Today, we'll continue a focus on legacy. We'll seek to answer the question, to what extent are you passing on good and not just profit? And what is the legacy really? What is the difference between passing an estate and passing a legacy? We said last week that conversation is the key to cementing a wealth transfer plan. And we defined wealth as being more than just financial assets. Okay, so there again, we need to define some terms, but we want to avoid, at a minimum, we want to avoid the financial risk of a failed estate plan. We've said that a legacy letter is the written copy of a wealth transfer plan, which is this bigger thing on the way to legacy, right? And that legacy letter then is the written copy of a conversation that needs to be owned by the heads of a family. We referenced last week Proverbs 13:22, and it says, "A good man leaves an inheritance to his children's children, but the sinner's wealth is laid up for the righteous." So, Paul, Chaz, the great wealth transfer is upon us in the next 20 years. And, I encourage you to take a look at this in your favorite resource. There is we'll call it the Great Transition, and I write about this in the Life Cycle book. It refers to the significant, and I'm quoting Google's AI here, okay, the significant movement of assets from the baby boomer generation to their millennial and Gen X heirs, a transfer estimated to be worth over $84 trillion by 2045, or 124 trillion by 2048. So let's call it $100 trillion for a nice round number, somewhere between 2045 and 2048. That impacts investment trends, family dynamics, the financial services industry. This is the largest transfer of wealth in financial terms, and I'm dumbing down wealth there on purpose. The largest transfer of wealth in the history of the world. So that is right around the corner in the next couple of decades. So baby boomers have amassed this wealth from decades of economic growth shifts. They've had capital infusions. Okay, all kinds of things that have happened to grow this asset base during their lifetimes. And now, the challenge is, and Google even says this, I love it, there's an under preparation, isn't there? And that's why we're talking about this.
And Aaron, speaking about growing asset bases, I got something for you.
Chaz, what's the latest question from Investment Land that you found?
Just trying to pick from the long list that he has.
I do have quite a few because I've been looking for these so Aaron can comment on them because there's quite a few things right now. There's this African-American guy that is really, he comes off, he's another really compelling.
Charles Payne?
No, not Charles Payne. No. This is some random guy from the internet. Right now, there are a number of people who are posting stock tips or stuff about, here it is. I found him. His name is Marcus. Let me just set this up real quick. And we're back. That's what Aaron would be saying right now. He likes that sound. This is producer Chaz. And one of the things that we've been talking about is kind of commenting on some of what's going on in social media. You get a lot of investing tips. And Aaron made the point when I first showed some of this to him that these are product conversations. These aren't strategic conversations, but you need to know that this is all over the place. And this is an African-American gentleman. His name is Marcus, and I cannot see his last name because of the text that's on the screen, but he is just sharing some investment advice. You know, when we talk about cutting through the noise at the beginning of the show, this is a little bit of the noise. As we talk about cutting through the noise, we have to note that some of the noise is good, but you still need to be able to filter it, right? This is kind of like a chew up the meat, spit out the bones situation. So here's a short video, and it's a minute long, and so here it comes.
Here are 5 of the highest paying dividend stocks that will pay you every month. A dividend is when you purchase a stock and that company pays you a percentage for keeping your money in that stock. Number 1, Ellington Financial, which has a PE ratio or price per earnings ratio of 9.4% and an annual dividend yield of 13.3%. Number 2, EPR Properties. Now this company has a PE ratio of 19% and an annual dividend yield of 7.7%. Number 3, Apple Hospitality REIT. Now this company has a PE ratio of 17% and an annual dividend yield of 6.6%. Number 4, AGNC Investment. This company has a PE ratio of 6.4% and an annual dividend of 15.5%. And number 5, Armor Residential REIT Investment, which has a PE ratio of 7.7% and an annual dividend yield of 15.72%. Now if you want more information about dividend paying stocks that pay you monthly, drop keyword monthly below.
Oh man, I'm so stressed.
So that is the noise that's going on right now. This is very popular. Because I do stuff for ASV Online, I get all kinds of financial shorts now. Okay. And so I mentioned a young man. It was a young Asian man, used to be a school teacher. He quit his job. He started investing. And we talked about that.
This was 2 weeks ago.
Yep. This is another guy. Again, you will see him. If you start to click on anything, the algorithm will now feed you this guy. So break it down for us, Aaron. Help us be wise and decide well.
Okay. So let's just start with the fact that PE ratios are not percentages. Okay. So it could be a percentage.
It's the inverse.
If the numerator was smaller than the denominator, right? So you remember that from basic math class? Okay. So when you're talking about, unless we're talking about stocks that are costing pennies, meaning under $1,
sure,
then the numerator is going to be bigger than the denominator, right? So to state it in percentage terms, you'd need to be in the hundreds of percents, not in the 2 digits percent, whatever. Okay. So that's a little bit of a challenge to weed through, right? To cut out. But I'll comment on that. The other thing I want to say real quick is we've had and I want to come back to this because we've had a great conversation not long ago. I think it was April, maybe May. There were all these great, really entertaining, really high level programs that are out there talking about stock tips and dividend investing ideas. One of the biggest podcasts, I'll just generalize about Christian programs. There's one that is really way at the top and so good and so rich in information. And there's plenty of wisdom there too. Okay. The call to action though, I question, right? And the reason, and I'm in a really kind of bunny trail off of the point, Chaz, on purpose, but ASV is there to do what? To help with decision making. Do we sell services on this program? Do we pitch anything on this program? Nope, not really. In fact, not at all. So I'll just say this, that podcast that I actually love listening to by a guy that I really admire who hosts it, ends up with a convincing argument every single time for buying a dividend-paying stock. Okay? So I'll leave that aside. But in my mind, what we're doing is no different in terms of what you just played to that podcast. Okay. What we're doing is saying that, yeah, that's okay. Maybe he's got some good ideas in there. Let's go look them up, right? Let's find out. For what purpose, right? In the context of what decision, for what family, and with what calling in mind. So those are the things. Now, with that, thank you for letting me kind of backfill. Dividend investing is amazing. It is worth doing. It's for a small percentage of the population. And by the way, when stock prices are really high, we've been setting all these new records. Okay. I would like to know how the dividend got so high, because if you do that math, while asset prices are really high, how is it that those dividends got so high also? Are those companies really struggling on price? That's one possibility. Or are they offering something that's too good to be true? Paul?
Most of these are REITs, REITs, Real Estate Investment Trust.
Okay.
They have to give over 90% of their revenue away. Okay. So there's almost no growth opportunity in those. Okay. You talk about PEs, it almost doesn't matter because they can't retain capital and they can't expand. It is a tax. It's a pass-through tax situation. Okay. So it's kind of a proxy for a bond, guys. I mean, that's what it is. And so it's not dividend investing. It's income investing. And you have to understand that.
Well said.
Second thing is, I don't know what the flow to those stocks are, but this guy could be front running. He might be painting the tape. There's all kinds of
You don't need a license to do that.
No, you
In fact,
don't.
You shouldn't have one because you'll lose it.
Right. And so I haven't looked those particular things up. This is the first time I heard of them. But I know at least 3 or 4 of them are REITs. And you can't assess a REIT the same way as you'd assess JP Morgan, another dividend paying stock, right? You don't assess them the same way. So we've got someone who's not giving you the information to discern.
Thank you. This was so fun.
One of the things too about these videos is this is not an in-depth analysis. This is a quick flyover. With the intent to make you go, oh, I want to learn more about that. And they even comment more. They're trying to get clicks. My hunch is, well, I know this for a fact. These people are not licensed anything. These are just people that have found they're almost more of like a financial influencer, if you will. And they're becoming that, and they're growing an audience. So
isn't that interesting?
That's important to note, because you just said you can't do this, you can't do that, because you'll lose your license if you don't have a license to begin with.
Only if you're front running and painting the tape, you would. We don't know that because I don't know what the float is. But just bragging about a high dividend is meaningless when you're talking about a REIT. Right. Because you're not talking about a company that can expand.
And if it's not a REIT, and it's one of two things: either that stock price is really low,
or that dividend is in danger,
or and that dividend's too high. Which you got to ask the question: what one isn't a good thing, and the other one's too good to be true. What's going on here?
Dovetail off Paul, I know at least 3 of those were REITs he was talking about.
Okay,
and I think one of them is probably a pipeline master limited partnership, which are kind of the same thing.
Okay.
So,
and hey, at Fideer, I'll say this: we hold real estate, commercial real estate, right? We hold it as an offsetting asset class, right? It's one of 20 cylinders in the engine, if you will, globally, that has its own behavior, right? And that's why we hold it, just like gold, right? We didn't buy gold at the beginning of the year and think, oh, what a great currency play we're going to have for 2025. I've held gold in portfolios since 2006. Okay, so there's that difference. Okay, so it's all that. Go ahead.
I don't want to get us too far off topic, but I think that these type of little discussions of what's out there in cyberspace, because remember, people are going to hear this on Instagram, on Facebook, on TikTok, and they're there for other things, to be entertained by someone dancing or a cat video, and all of a sudden, no, I'm serious, and all of a sudden they go, oh yeah, I'm thinking about my stocks right now, or I should invest in that. And that's the depth of information. So this is truly our intro to the show. This is the noise, and it's helpful to at least talk a little bit about this, because there's more of it out there. This is just scratching the surface.
All right, and we're back. So segment 2, let's talk about the so what. We've been in this dialogue about legacy. We have Paul Larson here, who's the Chief Stewardship Officer at Fideer Advisors. He's excellent at helping our client families and others consider what it is that they're actually wanting to pass on and what that looks like and really what the process entails. So, Paul, initially, we want to make sure that financial transfers don't fail, right? So that was the stated purpose of discussing the number one financial risk that we went into a few weeks ago. Last week, we talked about the legacy letter, and we talked about that being a kind of cement for a conversation, or the written copy that the beneficiaries, when they inherit, can say, oh, yes, we've had these conversations. We get this. So good to have the written copy. No surprises here. And on we go. Right? Okay. But now we're in the conversation about legacy. We've read from Proverbs 13:22. We've talked about the good man passing on the good. What is it that we actually want to pass on? What is it that we actually need to steward here?
Well, one thing, if you notice that verse, it says, passes on to his children's children. Okay? What can people pass on to grandchildren? Unless they've got a big wad of money and it's multi-generational transfer. But again, we talked about it last time. The good man is passing on what's good about him. It's not just merely financial, okay? It's a reputation, okay? It's an honor. It's a level of generosity. That's the kind of stuff that he's passing on. So that's a real important thing, because it's not saying that a good man should pass on an inheritance. It says a good man does pass on an inheritance, okay? Well, if I don't have any money, how am I passing anything on? This is what you're passing on. You're passing on a reputation and a model.
So it's tangible and intangible capital, yes?
Yeah. Now, having said that, when you're passing money on, and this $100 trillion you're talking about that's passing on, the lion's share of that is going to be business assets. It's not like they've got a vault like Scrooge McDuck full of dollar bills, right? It's businesses, it's holdings, it's investments, okay? And it's things that have to be made a decision about. And when you've got a business to pass on, huge opportunity, but also some huge pitfalls, because your business reflects your ethos. It's not just the balance sheet. It's not just the P&L. It's not just a quarterly dividend, okay? You've got relational capital. You've been stewarding jobs and the families that depend on those jobs. You're stewarding know-how. This is stuff God has given you. Intellectual property, we call it today, right? But you're stewarding know-how. You're stewarding capital. I mean, capital that's in one thing can't be in another thing, right? But you're also stewarding relationships, customer and vendor relationships, the whole value chain, your impact there. So when you're passing on a business, you're not just passing on a dividend, you're passing on an ethos that is a reflection of you. How do you pass what's good on? How does a good man pass that business on?
So we need a plan for forwarding that capital, okay? All of that capital. There are many different ways, and we try to avoid the how in this program. But I think some ideas are going to be helpful here, because to go about this without any idea of what it means beyond having the basic legal structures and a financial balance sheet is going to be pretty difficult for a first timer. And let me just point out one more risk before we go there. There's the risk, particularly, you mentioned business owners, okay? And I love working with this group. They're an impressive and very accomplished group of people. They can make decisions really well, and that's often not what they need help with, okay? They don't need anybody to run their business for them, okay? Nor do they want it, okay? Now, this is I'm talking about an established practitioner of some kind, right? Somebody selling widgets, somebody selling services, somebody selling, a purveyor of goods or services. Okay, they've been doing it a long time. They're good at it. What I have found is a risk that's unique to this group that goes along with the legacy letter is some idea. Yes, the story of the business, that's important. I would add that to the legacy letter, but something about how this thing functions. Okay, like to have an operating agreement is kind of like having a trust. Well, this is the formal version of everything. Here you go. Okay, that's not the same thing as, well, I know how to communicate with this particular vendor, or I know how to, get a more efficient output for what I'm trying to do than what the manual says, or something about the supply chain. It doesn't, an operating agreement doesn't give you that, right? Either does a succession plan or a will or a trust. So when you talk about business owners and the idea that the plan of attack, I'll call it, is in, or the plan of operations, the MO is in the mind of the owners, and that's as far as it goes, right? I've seen them with legacy letters. Okay, and the estate planning meeting, or the settlement meeting still blows up because nobody else knows how to run the business. Okay, and so there's an element of communication there that's also a big risk that's unique to owners. I would argue that getting organized is the first thing that they need to do, and that starts with them jotting down how this thing actually runs.
Yeah, you can get an estimate of the value of a business with a bunch of different algorithms, right? Ratios and that type of thing. But what's hard to put a number on is the goodwill, whatever's good about that business, right? And so you need counsel for that. You need someone outside yourself and outside your brain pulling this out of your brain, okay? And then a really good place to go from there is trying to put together a mentoring relationship. How would you mentor someone coming into this? And if you can pass that on in that way, and there's procedures for this, I can show you a diagram for this. If you can pass that intelligence on before you're ready to pass on, okay, then you have a chance of preserving whatever was good and generative and positive, what other part of the ethos. So it takes some self-awareness. It takes some business awareness to do that.
There's a lot here about writing it down, about getting it straight, about communicating it. What about getting good counsel? You mentioned mentorship. Those are two different things, but I've heard both come out of your mouth recently. And by the way, I want to make sure, Paul, that while we're together, we articulate, and I'd like to hear your version of this, the difference between estate planning and legacy planning.
Well, estate planning is going to be kind of the technical process by which you pass on assets, tangible assets, okay? Legacy is where you pass on whatever's good, whatever insight, spiritual maturity, wisdom, how you pass that on, okay? And that takes work, and it takes time, and it takes, again, self-awareness, okay? But these are primarily, I believe, the good. The good that the children's children of a good man inherit. Mm-hmm. Those are the things. And they can't be weighed, they can't be counted, okay? They can't be borrowed against. So what has God shown you and done? And it comes down to take a real hard look at how you got where you are. But it's not only the what of your business ethos or the how, it's also the why. The why. You chose to do this and not something else. Or you chose to stop doing something else to do this. Those whys are really important. And it's not that someone has to memorize your biography, but you should, I believe, be in a position to come to grips with that with a thankful and grateful heart, okay? Because it's God that put this in your hands. Mm-hmm. Whatever's good, whatever you are stewarding, it belongs to somebody else. Mm. So how do you pass that on and not just let it wilt?
What I'm hearing is the question of how to transfer good fruit.
That certainly is part of it. Yeah.
So if the financial numbers are one form of good fruit or blessing, then what about the rest?
Think about this, and I mentioned this to you, and you had a strange look on your face when I mentioned it. But it's not because of government that we have 911 and sanitary sewers and water treatment plants. Those things they come from taxes, but guess what? You can only tax wealth creation. Okay? If everybody has $100 and you tax everybody $1 a year, it might last 100 years, but it's going to end on 100th year. The focus has to be, are we creating value to move our community along? So privately held businesses are vital to a community. When they start leaving, it's not just the jobs or, it's the fact that that community is no longer creating wealth and creating value.
Mm-hmm. And there are very few wealth creators, let's be clear. I mean, there's a concentration of wealth in business equity that you've been referring to in this particular episode, but there's also the reality that the percentage of Americans that own businesses, it has grown, but it's still not the majority of our population.
No, it's the majority of the wealth, number one. And number two, you have people working in those businesses that are part of that wealth creation equation. All right. So it's just because maybe a single person's kind of managing all this, right? He can't do it by himself. It's human relationships that are compounded and leveraged to do that. So everybody has a part to play, everybody in a business. So you're right. Not everybody's a business manager, but I don't know what the statistic is on how many financial estate shifts fail, but I have a feeling that a lot more business value wilts and fades away in the transfer.
Well, let's make that some homework that we do for our listeners, and that's something we can post as weeks go on.
Let's have Chaz look into that.
Okay. Maybe outside of the feed he's been getting from all the noise. No. Okay. Chaz is laughing. That might not happen. Okay. So what I'd like to do is just hit pause here and encourage our listeners to take a look at stewardsview.com over the past few weeks. We've been in topics about estate planning and legacy. Legacy and estate planning are not the same thing. And so what we want to do is to equip you to be able to make decisions on both levels. And I think if you look back over the past month, you'll find that there's some good resources there for you. Take a look at it. Is referred to in the menu as white papers, because there are some, but there's also just the idea that, hey, this is a blog. You can type, even in your URL, type in stewardsview.com/blog and pull up some of the writing that's there. You can also order a copy, Chaz, of the Life Cycle of Wealth book. I know you're excited about this. Thank you. But that's out there online as well, direct from the publisher at a slight discount from the retail options. Okay, so with that, it's been a pleasure to be back. I do hope this session has been a benefit to you, the listener, and others you decide to share it with. We invite you to connect with us online at stewardsview.com. From all of us here at A Steward's View, we look forward to connecting with you again next week. Until then, please do be wise and decide well.
You've been listening to A Steward's View. To learn more about Fidare Advisors or speak with Aaron, visit fidareadvice.com. That's FIDERE advice.com. To listen to this and other episodes of A Steward's View, visit astewardsview.com. A Steward's View is brought to you by Fidare Advisors, a registered investment advisor offering financial planning and asset aggregation. Asset aggregation systems are designed to align portfolios across accounts into a single, globally optimized investment plan for families it serves. Fidare maintains liquidity of client capital at major custodians and utilizes asset managers that have shown consistent historical performance through excellent risk management. This program is not an offer to transact any securities and does not constitute a financial planning engagement. Information provided has been prepared from sources believed to be reliable, but is not guaranteed and does not represent all available data necessary for making financial decisions and is for informational purposes only. Fidare and its representatives do not offer tax or legal advice through Fidare. Please consult the appropriate advisor. Fidare Advisors LLC is a registered investment advisor. To discuss your situation or to learn more about Fidare, please visit fidareadvice.com. That's FIDERE advice.com.